Hey, it's Rick. It's Friday afternoon. Because it's Friday, end of the week, I'm going to focus mostly on weekly charts. A rundown of what's happening, what I think might happen. So we have the S&P 500 on the weekly here. So we had really what we call a narrow range this week. Didn't exceed last week's range, didn't go above it, didn't go below it, and actually closed in the upper half of last week's range. So this is a good sign. A couple more weeks of consolidating here would be a good thing. The one thing that I do note is that from the peak here to the 40-week moving average is almost 8%. So it's a little extended, not overly, but a little extended. So you'd expect a little sideways action and let this moving average catch up, or even a little downward move here and get these a little closer. If you go back, once you get into a stage two uptrend, if you just measure some of these peaks, I'll just take this one here to the 40-week moving average is about 10%. When it got up here, this peak up here got fairly spread out. Again, it was only around 7%. So having it right now at about an 8% spread between the price and the 40-week moving average just suggests it's a little extended, so it just means a little bit of caution. We clearly have gone from a stage two uptrend up here. This would be the topping phase here, or what we call stage three distribution. And then we got into a clear stage four decline for most of 2022. And now we're arguably finishing the stage one basing phase and coming up into potentially another phase two bull market. But I have one caveat here that makes me just a little bit nervous about jumping the gun here. So this is the SPY, which is market weighted, the 500 largest companies in the US market, weighted by market cap. When you look at the same 500 companies on an equal weight basis, so the ETF for that is RSP, you see quite a different story. We have the same uptrend through 2020, 2021, the same, more or less the same distribution phase up here. The decline was shallower and not as prolonged. And then we've gone into what I think we're still in the stage one basing period. So I've drawn a box here around this range. So we really haven't started to climb. And the reason for this is the SPY is having weighted by market cap. You get a huge weighting in Apple, NVIDIA, Amazon, Google, I think are all in the SPY. And they've been on a bit of a tear. And so that's what's dragging it up. But when you look at all the others, the other 490 some odd companies, they've just been sort of mushing along. So I don't think it's time to get super aggressive quite yet. But that's sort of my take there. If you look at the QQQ, it's a similar situation on the weekly, probably even more pronounced. This climb is much steeper. This peak, or this price from here down to the moving average is more like 15%. So it clearly is getting extended, which makes another big move sort of very difficult. I think more likely it's going to trend sideways and let this moving average catch up. And it's a very similar story when you look at the equal weight QQQE. So this is the 100 largest companies on the NASDAQ. It paints quite a different picture again. It's still bullish, still arguably in a good start of a stage two uptrend, but less extended. So if anything, I would favor NASDAQ listed stocks right now. they seem to be gaining more momentum. So that's my take on that. Looking at a couple of the others, small caps, just basically in this range. Just I draw a box around, they're just flat. They're going nowhere. You can just draw a box in here. We need this to move up and get this 40-week moving average turned up before we get really aggressive in the small caps. Mid caps is probably exactly the same. Yeah, pretty much. Again, if I draw a box starting about here, something like that. So we're in a bit of a trading range there as well. Turning to Canada, not great. Same situation. We're just in a range. There's no defined trend here. We started to go up, and now it's rolled back over again. So there's few things to find in as far as the Canadian indexes. There are some stocks that are doing okay, but it's tough slugging. Just turning back quickly to the S&P, and we'll look at this on a daily chart this week. I don't know how many of you watched the my Wednesday video, but Wednesday was here. And I drew these lines out, what I would like to see happen with price for the SPY over the next week or so. And these, I just drew an extension of the 21-day moving average and the 50-day moving average, just projecting them out in the future. Well, we didn't get exactly what I was looking for, but it's more or less this turned out that way. Yesterday was a big gap down, but then recovered and closed right near the highs. Today was the reverse. We also gapped down. We ripped higher all day and then came right back to where we started. This actually shows up well on a 5-minute chart. I just pull this up. You see what happened today. This is today's action starting here. So we gapped down, ran down further. Oh no, sorry, here's where we are today. That was yesterday. Down here, we were a little bit down and then ripped higher, getting all sorts of promise. And then in the last, what time is that, 10:30? So the last 2.5 hours, just fell off a cliff. So obviously a lot of the big funds and institutional investors didn't want to hold anything over the weekend and just started dumping the shares. So that doesn't bode well for Monday, but we shall see. So that's what happened there. On my model portfolio, I did make a couple of changes. Just quickly reviewing the Canadian side, still have the HXU, which is the Canadian, the TSX proxy with the 2 times leveraged. I'll pull that up in the chart. I think I mentioned on Wednesday, here's Wednesday here, if it went below this price here, 1850, I was going to sell at least half of it and look to re-enter. Well, I gapped down big on Thursday, so I said, oh, the hell with it, I'll just keep it. Because my entry was way down here anyway. So I'm still up about 3% on that one. West Shore Terminals, same thing, up about 3% on that. Oops, what happened? And it started to drift sideways. So that's okay. And then Lundin Mining, how you pronounce that? I've opened a position here. I added to it here on Wednesday and had a great day today. Although this is a very wide range bar. And what I'd like to see is something as I drew out here, breakout through to around $11 area, pull back, contain the pullback around 1060, 1070 or so, and then I'll load the boat if we break that up again. On the US side, I did add a small position on the triple leveraged Russell, the small cap index. This was actually a day trade I took yesterday, entered here. I sold almost all of it near the highs of the day, but I did keep a couple hundred shares to see what happened today, and it's moving up nicely. So we're up about almost 7% on that little piece. FTNT is doing well. It was bought back here. Had this pullback on yesterday right to the 20-day moving average. It held it and then almost went to a new high today. So this one's looking strong. I did add Salesforce, small position. I think I talked about this in my Wednesday video when I broke this downtrend line. But since then, the last 2 days, it's done nothing. So hasn't hit the stop. The stop's down here. So it's just still in limbo land. So we're down little over 1% on that. So no big deal. And then today I added Dynatrace. This had a breakout of this downtrending line here. So I took the entry here. It ran up nicely, but then ran all the way back with the market. I won't call it a collapse, but this afternoon. So I'm slightly underwater, 1% there too. But my stop is down here. So it's not the way you want to see a position get started. But again, I only just took a small 10% position in that. So it is what it is. We'll see what happens next week. That's pretty much it. I'll do some scanning this weekend. I think there are a lot of, despite the markets being sort of flat, there are some good setups out there. Right now, the model accounts are only about 50% invested. So they're still, by the end of next week, I'll either be 100% cash or 100% invested. I don't think there'll be a happy medium. So if the market goes down, I'll get out of everything. And if it's looking promising, I'm going to load the boat and get 100% invested. So that's it. That's all. Have a great weekend, everybody.